We had some amazing events on stage. I was on stage with Tone Vays, and I hit him hard with that question about what he wants to exclude people who are not qualified investors from ICOs. And I had asked him on stage, oh, so somebody with just 10,000 to their name shouldn't invest? You challenged him on that. People have already seen that. But the one I really liked was also you were with Joseph Lubin from Ethereum, and he insisted to you that despite what you said, that Vitalik is not the head of Ethereum.
That is kind of interesting because everyone the common knowledge is that Vitalik is like Ethereum, and Ethereum is Vitalik, and you've got a single point of failure there of Vitalik. If he went down in a plane crash, Ethereum would crash, well, along with Vitalik if he went down. So Joseph Lubin saying, he's not the head of Ethereum. I thought that was fascinating because he then went on to explain why he wasn't the head, but he seemed desperately to try to explain this, but it wasn't very convincing. But not. So the very, very best event on that day that you spoke at CryptoConf was here on stage. We're going to throw to the first half of it, the first 10 minutes. The CNN reporter who was the moderator, she had asked whether or not the hype around Bitcoin and particular ICOs and how Bitcoin went from 1,000 to 20,000, whether that was a bad thing for Bitcoin and cryptocurrency. Yeah, let's get into it. And the question, of course, is why am I wearing a Hawaiian lei?
So I work at Coinbase, and hopefully many people have heard of Coinbase. We look at ourselves as the easiest on-ramp into the cryptocurrency space. So if you're looking to buy $5 or $5,000 of Bitcoin, many people download our app to do that. Obviously, we saw a wave of retail capital enter the space through 2017. The market cap of all cryptocurrencies ballooned, anywhere between 10x and 50x, and we saw at the greatest amount about $800 billion of market cap of all cryptocurrencies, with Bitcoin being the majority of that. Net, we think that was a positive thing because with it comes new capital to the ecosystem, but also comes with it the attention and awareness of a larger public. And it comes with it too, probably most importantly, developer interest. So I think what most people fail to realize is that right now we're in the what we call investment phase of cryptocurrency, of Bitcoin. People are buying crypto, they're speculating on the price, and they're storing it, and that's fine. But we have to get to the second phase, what we call the utility phase, where people are actually using cryptocurrency to solve real problems. And the way to get there, in our opinion, is to have really smart developers enter the space and build on top of these open technologies. So from my perspective, as we saw this kind of run up in price and a recovery, net, it was a good thing because it brought a lot of new interest.
Yeah, like all those headlines and the buzz, good, bad for the future?
I think it's good. I agree that awareness is a positive thing. It got a lot of, especially younger people, into investing in the market. Now, stocks and other assets have been not the easiest to for a large percentage of the population to participate in. And so this is an accessible asset class. Now, what I worried about is just people speculating, taking out, second mortgages because they didn't realize the risks associated with investing in the crypto. But I think it just brought a lot more investors into the market, and I believe that we need to offer more assets to a broader swath of the population worldwide.
Max, you bought at $3, so I guess good news for you.
Well, I mean, why this idea of hype? Why are we singling out Bitcoin? I mean, what about the hype in the bond market? It's at a 5,000-year high. What about the hype in the stock market right now? What about the hype in London property market right now? I mean, there's a lot of hype out there in markets all across the land. That's the part of the way markets function. It's not unique to Bitcoin.
Well, the bubble was pretty unique. I mean, compared to all the previous bubbles.
I mean, your bubble is my pullback. I mean, there's a correction in play. The target's still 100,000, and it's taking on fiat currency. And we've just seen the beginning, the earliest innings of this. So, anytime you're involved in any market, there's volatility, and Bitcoin is similar in that regard, but it's not unique. I mean, when the bond market crashes or the U.S. dollar crashes, I mean, who are we going to go to and say, why did you hype it? Where's Jim Cramer going to be when he's hyping stocks all day long on CNBC? That's completely irresponsible. Okay, who's calling him to account, right? So I don't think it's hype so much as the natural ebb.
Well, CNBC was hyping crypto in a big way.
To be fair, it was kind of focused on Ripple at $3. I'm not sure you can put that in the same category as Bitcoin, but they did kind of come late to the game. We were covering Bitcoin when it was 11. The Kaiser report has created millions of crypto millionaires all over the world. CNBC came very, very, very late to the party, and they caught the tail end of a speculative surge. Bad on them. They suck.
Let's move on. Let's not talk about our competitors.
Are they sponsoring this?
Jalak, I'm glad you mentioned Bitcoin as an asset class. So my next question is, everybody is talking about Bitcoin as a thing to invest in. Right. How do we bridge that gap between Bitcoin as an asset class, Bitcoin as a means of currency, means of value exchange?
Yeah, I think it's... obviously it's kind of morphed into this store of value investable asset, which wasn't its original purpose. And I find that evolution very interesting. I don't think we've seen the end of that evolution. And we're certainly seeing a lot of development happening on the Bitcoin blockchain, kind of behind the scenes. So I think it's still to be determined what it's ultimately going to be. And it may be an investable asset, maybe a new reserve currency. It may be also a transaction mechanism. And so I'm tracking all those use cases, and I haven't written any of them off yet.
Adam, you come from that background of exchanges, so obviously asset class, but how do we move on? Do we move on? Do we want to move on?
So I think what's important to remember is Bitcoin's the first of its kind, right? It was the first open protocol to solve something called the Byzantine generals problem, which was previously what many thought to be an unsolvable computer science problem. From that, we've seen thousands of other digital currencies effectively copy and mimic a lot of what Bitcoin originally introduced. That's important because what we're seeing happen is innovation on the edges. The Bitcoin developer community, which is global, pretty darn diverse when you look at it, recognizes it has a very large network, and in many ways it's being used as a store of value. Right? We're not wandering into every coffee shop paying with Bitcoin, and that's okay. Over time, though, what we're seeing happen is that these new crypto assets, Ethereum is a great example, they have a much larger kind of surface area. You can develop more things like smart contracts on top of them, and that's allowing a lot of really unique and interesting things to happen. And we're watching Bitcoin be a little bit more safe, a little bit more stable, a little bit more secure in many ways with the type of methods it uses. I think there's going to be a place for both into the world. You're going to have some cryptos that are going to gravitate more towards electronic payments or solving new utility issues. Others are going to sit there as a way to kind of store value in a process that's decoupled from the existing financial system.
So you see it rather than development, both of these working next to each other in parallel?
I think they're both going to work side by side, exactly.
Max?
At the present, Bitcoin's use case is store of value. And that will continue until the price reaches some equilibrium point, let's call it 100,000 per coin, where you'll be seeing it more used as a medium of exchange. At some point, it then becomes a unit of account as things are priced in Bitcoin, as fiat money disappears. So similarly, gold is a store of value, and from time to time it's used as a medium of exchange. It can be used as a medium of exchange. Central banks own gold. They swap back and forth. Central banks will be buying Bitcoin as a strategic reserve, as will sovereign wealth funds. As we see a transition from the fiat currency, which is unsustainable. The average lifespan of a fiat paper money currency is 27 years. Every single one has gone to zero. None have survived. We only have gold and now Bitcoin.
How do you know that Bitcoin will survive?
Because it fulfills Aristotle's 4 conditions for sound money, which has been around for thousands of years, that definition. And it does so electronically. And as long as people want to trade, as long as there's an instinct to trade, as long as people still populate this earth, they will want Bitcoin to trade with.
Do we need to first overcome that problem with mining and how energy inefficient it is for us to move on?
I'll say quickly that compared to what? Compared to the fiat money world that's supported by the Pentagon, the dollar is a multi-trillion-dollar defense contracting nightmare that kills half of my tax dollar in America. That's unsustainable. Gold mining, very unsustainable. Plus, I just put a lot of effort into a company in South Africa
called Sun Exchange. So they'll be using solar energy to mine cryptocurrency. So using sustainable energy and marrying it with the blockchain. You can, for $10, you can buy a solar panel. They harvest energy from the sun. You get paid a dividend in crypto. So you're marrying solar, crypto, energy. You know, it's a beautiful marriage.
And I would add to that. So right now, Bitcoin uses a protocol called proof of work, and that proof of work is what people think of when they think about the unsustainable amount of electricity or energy that goes into the mining operations. There's nothing that beholdens Bitcoin to using proof of work, right? These are open protocols that anyone can write to, anyone can submit GitHub requests to change. And we may see something like proof of stake, which is what Ethereum is moving towards, which says instead of having computers around the world compete via computational cycles to solve the next block, instead we're going to rely on rationally economic actors that vote via the stake they have in this asset. So there are other options that are far less environmentally impactful, and I think we'll see a number of them succeed. I
agree. I think looking at it statically where it is now, technology has never remained static. I was at Intel for a while, and if you look at the Moore's Law and the processing, more efficient processing power over time, we're going to see that happen. We're going to see alternative energy forms, and we'll see also the technology and different consensus mechanisms emerge. So I think the combination of all of those factors is going to make, even if we have proof of work, it's going to be a lot more efficient down the road and less consumptive.
Wow, consumptive. I looked at Urban Dictionary, and I'm not sure that's even a word.